Hi. In the lesson, we discussed the basic concepts of budgetary accounting for governments, the use of the estimated revenues, appropriations, and encumbrance accounts. This PowerPoint provides an example of how to apply these concepts. In our rather simple example here, we have a government which is a newly established healthcare district in its first year of operations. So this means at the beginning of the year, it had nothing on its balance sheet. The district does record its budget in its accounting system. It does use encumbrances where appropriate. It has only one fund, the general fund. And all of its revenues are received in cash and all of its expenditures are paid in cash. So we don't have to deal with any receivables or payables in this case. Again, just trying to keep it simple. And also, since we're focusing on budgetary accounting and the budgetary entries are made only in the governmental funds, we'll focus just here on the general fund and we won't bother to show the entries for the governmental activities. So prior to the start of the year, the governing board adopts a budget for the year. It estimated revenues at $5.6 million and expenditures are appropriated at $5,550,000. So the first thing it does at the beginning of the fiscal year is to record the budget in its accounting system. Debit estimated revenues 5.6, credit appropriations 5.55, and the balancing entry is to a fund balance account, $50,000. In this case, and typically we use budgetary fund balance as our balancing account. Note that it's a credit to fund balance, which means our budget anticipates that fund balance will increase over the year by $50,000 in this case. Note also, or remember, that the entry for estimated revenues is a debit, which is the opposite of the typical entry for revenues, which would be a credit. And the same thing for appropriations. The typical entry for an expenditure would be a debit, but in this case we are crediting appropriations. So again, the budget entries are always the reverse of the typical general accounting entry. Okay, so as the district begins operations, it collects $5.8 million in taxes and fees and other revenues during the course of the year, all in cash. So very straightforward journal entry. Okay, now the next thing it did was it ordered some goods and services at an estimated cost of $3 million. Now it hasn't received the goods and services yet. It hasn't been billed for the goods and services yet. It hasn't used the goods and services yet. It hasn't paid for the goods and services yet. So in no way does this action constitute the recognition of an expenditure. So we cannot yet recognize an expenditure for these goods and services. But our government wants to make note that there is a claim against its appropriations account in the amount of $3 million for the goods and services it has ordered. So to do so, it uses the encumbrance entry. And it records encumbrances of $3 million. And the balancing entry for encumbrances is typically encumbrances outstanding, so we credit encumbrances outstanding for $3 million. So at some point later in the year, our government received, paid for, and used some of the goods and services it had ordered on the prior slide. It paid $2.7 million for these goods and services. At the time it had ordered these goods and services, back a few minutes ago, they had been estimated to cost $2 million, $2.8 million. So now, because the government has, our healthcare district has received, paid for, and used goods and services, it can record an expenditure in the amount of $2.7 million. So we debit expenditures 2.7, credit cash 2.7. And we now can undo the encumbrances that were associated with the goods and services that have been received and used. So we reverse our prior encumbrance entry, debiting encumbrances outstanding, crediting encumbrances. And we do this in the amount at which they were originally estimated to cost. So we don't reverse the encumbrance entry using the actual cost of these goods and services, the 2.7. We reverse the encumbrance entry using the originally estimated cost of the $2.8 million. That's because we want to remove the entire amount of the encumbrances associated with these particular goods and services. Note that we still have $200,000 in encumbrances outstanding, and we'll have to look at how to deal with those later. Okay. Also during the year, our government incurred $2.6 million for goods and services that had not been ordered in advance. Keep in mind that all expenditure items don't require being ordered in advance. They might involve salaries, which are just paid when provided, or they might be goods and services that our district purchased without ordering them in advance. For instance, just went to the store and bought supplies. So in this case, we recognize expenditures of 2.6, balanced with spending cash of 2.6 million. Straightforward entry. Okay, now we've gone through the entire year and it's time to do our closing entries. So we close out our income statement accounts, revenues, and expenditures. And the balancing entry for our income statement accounts is fund balance. And in the case of the general fund, the balancing entry for our closing entries for the income statement accounts is usually unassigned fund balance. In a special revenue fund, it might be something different than unassigned fund balance, but in general fund, we close to unassigned fund balance. In the lesson for this week, there's more detail on the closing entries and in the use of the fund balance accounts. Note that we also close out our budget accounts at this time. Appropriations, estimated revenues with the balancing entry going to budgetary fund balance. Now in this case, the closing entries for the budget entries are exactly the reverse of when we recorded the budget at the beginning of the year. If we had amended the budget during the year, these entries might be something different than the exact opposite of what we had at the beginning of the year. Okay, so as I mentioned, we still have $200,000 of encumbrances outstanding, and we have to know what to do with those. There's no GAAP standard way of how to deal with these. They are addressed in the accounting policies of the specific government you are looking at. So let's assume for our government that its accounting policies provide that outstanding encumbrances are not closed out at year end, meaning our government intends to honor those encumbrances in the following year, so wants to keep track of them in its accounting system. And also, our government's accounting policies require that outstanding encumbrances are to be treated as a commitment of fund balance on the balance sheet. These are very typical ways of dealing with encumbrances for government. So this is a pretty reasonable or common assumption. So we will not close out or reverse the encumbrance entry for the remaining $200,000. We'll leave it sitting in our accounting system. But we do have to make an adjustment to our fund balance accounts to show that the $200,000 in outstanding encumbrances represent a commitment of fund balance. So that portion of fund balance is no longer considered unassigned, it is considered committed. So we make an adjusting entry to the fund balance accounts, debiting or reducing unassigned fund balance by $200,000 and crediting or increasing committed fund balance by $200,000. Again, in your lesson for this week, there is a section that provides additional detail as to when and how to make adjustments to the fund balance accounts. So following our closing entries, the income statement for the year would be as shown: revenues of 5.8 million, expenditures of 5.3 million, for a net change or increase in fund balance of 500,000. The year-end balance sheet would be as follows: 500,000 in assets, all of which are cash, no liabilities. The assets are balanced by 500,000 in fund balances, of which 300,000 is unassigned and 200,000 is committed. If you recall, unassigned fund balance was increased by 500,000 when we closed out the income statement accounts, but then it was decreased by 200,000 when we made the adjusting entry to reclassify part of fund balance from unassigned to committed. Now, our government would also be required under GAAP to generate a budget to actual comparison schedule for the year for the general fund. The budget to actual comparison is prepared on a budgetary basis, not on a modified accrual basis. GAAP doesn't specify what the budgetary basis is. Each government adopts the budgetary basis for itself, or perhaps state statutes may determine what its budgetary basis is. The most typical difference between modified accrual and budgetary basis is that for budgetary purposes, any encumbrances incurred during the year are treated as expenditures. In other words, they are shown as a claim against the budget in that year to represent that outstanding commitment. So if you look at our schedule here, under budget, you see the budget as we adopted it and did not amend it in this case. $5.6 million in revenues, 5.55 in expenditures for a budgeted change in fund balance of $50,000. In our actual column, we show $5.8 million in revenues, and we show $5.5 million in expenditures. So this is not the same number in expenditures we saw on the income statement, which was 5.3, because in this case, we've also included $200,000 in encumbrances incurred during the year. So the change in fund balance actual is only 300,000 here compared to the 500,000 we saw on the income statement. This allows us to show the actual commitments made against the budget during the year, including the encumbrances.